Hi guys, welcome back to my channel. Kelvin here. Warren Buffett Coco has once said that for an average investor, they should just invest into the S&P 500 ETF. It's good, cheap, and will always go up because stocks. Nah, just kidding, he didn't really say the last part. But if you just follow his advice blindly, you will earn the full amount because there's this scary thing called tax. It'd be like, where's my money? It comes in the middle of the night and takes your profit away. Just kidding, no, not really. If you invest in US dividend stocks, here's something you need to know. That tax monster, also known as withholding tax, takes away 30% of your dividends, then only give you the remaining 70%. And if you didn't know about this, when you see your dividends, you'll be like, eh? Why I get so little one? So in this video, I'll be discussing how to evade those taxes, legally of course, using something called Ireland Domiciled ETFs. Stuff like what are they, how can you invest in them? There's a lot to talk about, so let's start right now. The first thing you may ask is, what is Ireland Domiciled ETFs? I only heard of Ireland and ETF, but Ireland Domiciled ETFs? Nan desu ka? Basically, there's a tax treaty between US and Ireland, meaning that US tax Ireland. So usual price is 30% tax. But because we are best friends, Limpe give you discount, 15% tax only. Very cheap. Okay deal? Then Ireland be like, 15% ah? Okay lah. Which will totally know what happened, but you get the idea. So if you are a non-US resident, like maybe you are from Singapore, and if you invest in US ETFs, Uncle Sam will be like, I want 30% of your dividends. He takes it and gives you the remaining 70%. But since US and Ireland has a tax treaty, if you invest in ETFs in UK, Uncle Sam will be like, I only want 15% of your dividends, and you get the remaining 85%. So that's Ireland Domiciled ETFs. One of the most famous S&P 500 ETF is VOO by Vanguard. This ETF gives out dividends of about 1.5%. But because of the 30% withholding tax, you will only get 1.05% dividends. So instead of VOO, we can invest in VUSD, which also tracks the S&P 500 and is also by Vanguard. The only difference is that it is an Ireland Domiciled ETF. How do we know? First, we go to the ETF official page, which is by Vanguard. We can see that it says Ireland Domiciled. Second, if you see the ticker symbol, it says LON VUSD. LON stands for London. All Ireland Domiciled ETFs will always be listed in London Stock Exchange. But why London? That's because Ireland is in UK, whether they like it or not. And UK Stock Exchange is called London Stock Exchange, hence London. Let's see a few more examples. Pet ETF SLK in US is Ireland Domiciled version is SSLK. Total World ETF VT in US is Ireland Domiciled version is VWRD. Before I move on, I want to point something out. Even if the ETF is an accumulating ETF, meaning that it doesn't distribute dividends but instead reinvest them, you will still be taxed on those dividends. So it doesn't matter what kind of ETF or stock it is, as long as it distributes dividends, you cannot escape the withholding tax. Now, one of the questions on everyone's mind is that what are the differences between the US version of the ETF versus the Ireland Domiciled version of the ETF? Is the Ireland Domiciled version actually better? Let's compare the performance first. Generally, the performance between the two ETFs are almost identical, which makes sense, right? Because they are tracking the same stuff. It's like US has a terminator and India also has its own terminator. Sure, they are from different countries and they may look a bit different, but they are actually the same. So for example, VOO and VUSD, both of them are tracking the S&P 500. There's only a slight difference here and there. So if you compare them in Google, you will see that they move quite closely. Same thing with VT and VWRD. In terms of performance, they are almost identical. The only difference is that you get to save on taxes on your dividends when you invest in Ireland Domiciled ETFs instead. Take note that there are some ETFs that have slightly more difference in performance. For example, VWO from US and EIMI Ireland Domiciled ETFs, which tracks emerging markets like China, Brazil, and Taiwan. All in all, Ireland Domiciled ETFs perform almost similar to their US counterparts. Next, let's take a look at their expense ratio. For anyone who is unaware, expense ratio is just the management fee for the ETF. Stuff like admin fee, marketing fee, and so on. Then you may say, got fee one ah? Of course lah, otherwise what the management is going to eat? Eat the air in potato chips bag ah? During the tears of their enemies ah? But the good news is, this fees is already included in the price, so you don't have to pay anything extra. For example, this is VOO's expense ratio, 0.03%. That means that for every $1,000 you invest, you are paying 30 cents to the management, which is super cheap. It's like you buying one rabbit candy and give the management every time you invest with them. In most cases, Ireland Domiciled ETFs will have a higher expense ratio than the US version. For example, VOO expense ratio is 0.03% versus VUSD, which is 0.07%. Another example, SLK TAP ETF from US is 0.12%, while SSLK from UK is 0.15%. So even though the Ireland Domiciled ETFs have a higher expense ratio, it's already very cheap, considering that you'll be saving 15% on your dividends. Next, let's talk about liquidity. If you do not know, liquidity is just how much the stocks are being traded every day. So if a stock has a higher trading volume, that means that it has a higher liquidity. But if it has a lower trading volume, it has low liquidity. So what affects liquidity is mainly popularity. If many people like the stock, and if they can afford to buy the stock, they will trade the stock more, causing it to have high liquidity. As you might imagine, US ETFs are more popular than Ireland Domiciled ETFs. For example, if you take a look at VOO's average volume, it's almost 4 million, while VUSD only has about 340,000. Then you may ask, why are you talking about liquidity? And what does this have to do with me? The reason is very simple. When liquidity are low, stocks will have a very wide bid-ask. Or in simpler terms, it's a little harder to buy or sell the stocks at a good price, simply because the demand is low. However, the good news is if you are holding long term, the bid-ask spread doesn't really matter at all. Sure, you may pay the extra few cents when buying or sell at a slightly lower price, but who cares? The extra few cents difference will make you richer anyway. In summary, Ireland Domiciled ETFs have lower liquidity, but it doesn't really matter to long-term investors. That was a good comparison between US ETFs and Ireland Domiciled ETFs. Now, let me answer one of the most common questions, which is, how can I find the Ireland Domiciled ETF version of the US ETF? You can go to this website, justetf.com, click on ETF Screener, then on the left side, look for Fund Domicile, then change it to Ireland. Then you can search for the sector that you want. Maybe you're looking for US Healthcare ETF. Just click on sector, then change it to healthcare. Then you will see all the Ireland Domiciled ETFs. Try to search for the correct one by checking the names. In this case, the correct one will be iShares S&P 500 Healthcare Sector. We can double check by checking the description. In this case, it says US Healthcare Sector, which is totally what we are looking for. However, you will see that the currency is in British pounds. We don't want to buy in pounds because that will introduce forex risk. So we can click on listing, then look for the one that's in London Stock Exchange and with USD currency. Finally, we can see that IUHC is the one we are looking for. Yes, I know that this method is very mafan. It has too many steps and it is too complicated. So if you are as lazy as me, a much simpler way is to use Google. To do this, you can key in the sector that you are trying to find, then followed by Ireland Domiciled ETF, like US Healthcare Ireland Domiciled ETF. And tada! We see that this is IUHC again. So that was how to search for the Ireland Domiciled ETF. Finally, I want to talk about how to buy those ETFs. Buying ETFs is exactly the same way as buying stocks. All you need is just a stockbroker. But in this case, as you are buying from London Stock Exchange, you will need a broker that can access UK markets. Most of the Singapore bank brokers charge a super high commission, so we will just ignore all that. Then you have those super cheap brokers like TD Ameritrade, Tiger Brokers or Moomoo. But the downside is that they do not have access to the London Stock Exchange, so we will ignore those two. In the end, we only have two best choices. You can either use Interactive Brokers or Saxo because they are cheap and have access to London Stock Exchange. Personally, I prefer Interactive Brokers because it has lower fees compared to Saxo. Saxo has very high currency conversion fees and also higher trading fees compared to Interactive Brokers. Sure, Interactive Brokers has a monthly $10 maintenance fee, but when your account exceeds 100k, they won't charge this fee anymore. This means that Interactive Brokers is the best broker to buy Ireland Domiciled ETFs in the long run. So that was how to buy Ireland Domiciled ETFs. And that's all for today. Let me know down in the comments below. Are you investing in Ireland Domiciled ETFs? Like, share and subscribe as I'll be posting new videos every Monday and sometimes Friday.